Hey everybody, in this video, I'm going to show you how to raise your credit score by 100 points or more. My name is Jonathan Fodera. I've been in small business lending for the past 14 years. And one of the things that we know is how to work with really good credit scores and why it's so important. You know, people don't realize this, but your credit can dictate almost everything in your life, from how much you pay on a monthly payment to if you get approved for a house, to what kind of line of credit you get for your business, to do you get approved for an SBA loan. So it's important to understand how to raise your credit score and how to keep it elevated. So the first thing I want to go over is real simple. It's monitoring your credit. All right. Now, for you to be able to raise your credit score, you have to know where it is and you have to be able to check on it on a regular basis. The reason I say that is when things report, if something is out of whack, you need to know that right then and right there so you can fix it or address it. So first, the easiest way to do it is go onto Credit Karma and get your account set up. It's free, it's easy. Now, when you're using Credit Karma, it could be correct, it might be off a little bit. A lot of times we see it being off 50 to maybe even 100 points. That's not that big a deal. What you're doing is you're monitoring differences. It is a big deal if you're using that score to go off of to apply for financing, but you're using it to track differences. So I'll give you a quick example. Credit Karma with people that have really high credit tends to be lower. People that have lower credit, anywhere between 550 and call it 640, it tends to be report a little bit higher. It kind of gravitates towards that middle between, let's say 650 and 720. So there's other ways to get your credit monitored. There's tons of different services, and depending on what credit card you use and what bank you use, you can have it monitored for free through them. The biggest thing is you're constantly checking it. I'll give you an example. I had a client that came in, thought their credit was excellent, and they wanted to apply for a line of credit. Well, they didn't realize that they had two old accounts. My buddy Matt had two old accounts that came back around and recently hit him in the last 2 weeks with charge-offs. Took his credit from 700 to 550 really, really quick. So he worked on addressing that, and now he's building it back up, working on removing those to get his credit back into that 650 to 750 range. And that's the ideal range that you need to be in when you need financing for your business or higher. So the next point and the next thing that you can do is the obvious is make sure you make all your payments on time. All right, but there's other factors that come into play. So obviously it goes without saying to make sure that you're paying everything on time. But the next thing is you want to look at the statement dates, not the due date, but the statement date. And the reason you need to look at the statement date, is because if you pay it off by the statement date, it's not going to show. Like if you pay your credit cards on the statement date instead of the due date, it actually shows that it's a zero balance when it reports, or a lower balance when it reports, and it doesn't impact your debt to income ratio, right? Because when you're looking at credit, it goes payment history, how long these accounts have been established, debt to income ratio, and a couple other factors. If your debt to income ratio is really high, okay, even if you're making all your payments, if it's very high, 50, 60, 70%, that will actually drop your credit down pretty low and pretty quickly, I might add. So what I will say in that regard, besides monitoring your credit, making all your payments on time, you need to know that you got to pay everything off by the statement date, okay? When you're paying it off by the statement date, it's going to lower your debt to income ratio. Now, let's just say that your credit cards, your revolving lines of credit, okay, you do have high utilization and that's dragging your score down. What I would suggest is reaching out, either go on our website or reach out to me directly and get a simple interest term loan. What that'll do is it'll pay off all the credit cards, consolidate all the credit cards, get them down to zero, and that's a longer term line. So what that'll do is it'll lower the debt to income ratio substantially and your credit will go way up. This is a program that a lot of people use with us to start a business and to help boost their credit and pay down their credit cards. One of the things to keep in mind with credit cards, that interest compounds month after month after month. So if you're only making the minimum payments or twice the minimum payments or even more than that, but you're not paying it off in full every month, that interest can roll over and keeps accruing. And at a certain point, you're paying interest on top of interest if you're just paying those minimum payments, right? So that's just something to keep in mind moving forward, is you really want to be cognizant of that. I'll tell you guys a quick story. I have a good friend, his name's Austin. He came in and he needed to, get a line of credit for his business. When we pulled his credit, it came in just under where it should be for a line of credit. And he didn't understand why that was going on. And the reason it was going on was because of his debt to income ratio. He was paying off his cards and he was paying them off on the due date, not the statement date. So when they were reporting to the bureaus, it actually looked like his debt to income ratio was a lot higher, and he just came in under where he needed to be for a line of credit. So what we had to do was kind of analyze that, educate him on that. He fixed it, and then 2 months later, we were able to get him a line of credit. So that worked out very, very well for everybody. The next thing with credit that is super important, we went over monitoring your credit, making your credit payments on time, and your debt to income ratio. But if you need to boost your credit, if you have negative items on there, right, it's really best to work with a specialist. We have one specialist that we work with all the time that will help people dispute things on their credit, and not only that, but help improve and repair their credit. That is worth every single penny because of how important credit is in today's day and age, right? It's very important that you always have a strong credit score, because that's your borrowing power. And your borrowing power will allow you, to borrow more money at cheaper rates for growth and expansion. All right, so typically what we do is, someone doesn't have good credit, we're not the perfect experts with it, we get financing, but what we do is we basically do a review, and if it's something that we can't help with, we call our specialists in and they take care of it. So please make sure you're monitoring your credit, and any negative drops or changes, you need to have addressed right away. Okay, now I just want to recap everything we've gone over. This way you know how to boost your credit score easily, by 100 points. One, credit's very important. It is your lifeblood to borrowing. Everything you do, whether it's renting an apartment or getting a mortgage for a house or getting a line of credit for your business or an SBA loan for your business, it's going to go off of your personal credit. It's very, very important to have strong personal credit. Two, monitor your credit. Always monitor your credit. You can use Credit Karma for free or another service. Three, make sure that on all your credit cards, you're paying them on the statement date, not the due date. Four, keep your debt to income ratio as low as humanly possible. If you see it start climbing up, come in, apply for a simple interest term loan. That will help you consolidate those and save you a bunch of money, because you'll be paying a simple interest over 5 years versus compounding interest monthly. This is the action I want you to take. I want you to get signed up to monitor your credit, all right? Monitoring it is the best way to make sure it's where it needs to be and it stays there, all right? I hope this helped. I hope you integrate your business. And if you need us, we're always here to help guide you and help your business improve. And credit is a huge part of that.